Right now, your bank is handing HMRC a report showing exactly how much interest your savings earned last year. Your name, your national insurance number, the amount. You were not asked. You were not told. And if the numbers show that you owe tax, HMRC is not going to phone you first. They are going to send an investigation letter. Most pensioners have no idea this is happening. They assume that because tax was always handled through PI, because nobody ever asked them to file a return, everything is taken care of. It is not. And the reason so many pensioners are getting caught comes down to one number that almost nobody knows about. The full state pension pays £12,547 a year. The personal allowance is £12,570. The gap between your state pension and the point where HMRC considers you a taxpayer is £22. That is the entire margin for the year. Every bank and building society in this country files an annual interest return with HMRC, showing exactly how much interest your savings earned that year. Your name, your national insurance number, the amount. All of it feeds into a system called Connect. 22 billion lines of data from more than 30 sources cross-referenced against every tax record in the country. In the last year alone, Connect recovered £4.6 billion in extra tax. It flags 500,000 taxpayers for investigation every single year. And it does not matter whether you have 10,000 or 10 million in the bank. When the numbers do not match, Connect finds you. I want to tell you about a woman I will call Margaret, because what happened to her is happening to pensioners across this country right now. Margaret retired 3 years ago. She had her state pension coming in every 4 weeks and about £40,000 sitting in a savings account from the sale of her late husband's car and a small inheritance. She was not rich. She was not hiding anything. She had never been asked to fill in a tax return in her life. Then one morning, a letter arrived from HMRC. Not a reminder, not a form to fill in, an investigation. HMRC told her that she owed tax on savings interest she had never declared. They told her that her bank had already handed over her account information. They told her the penalty for not declaring could be up to 30% of what she owed. And they told her she had 30 days to respond, or the amount would be taken directly from her bank account. Here is how the numbers worked against her. £40,000 at 4% interest earned her £1,600 that year. The personal savings allowance for a basic rate taxpayer is £1,000, so £600 of that interest was taxable. Combined with her state pension, she had crossed the line without knowing it. Her bank did not warn her. HMRC did not write to her in advance. She was expected to know, and she was expected to contact them herself. And the system that caught Margaret is only getting more powerful. In 2021, HMRC gained a legal power that most people have never heard of. It is called a financial institution notice. Before 2021, if HMRC wanted to see your bank records, they had to apply to a tribunal. A judge had to approve it. That is no longer the case. A financial institution notice allows HMRC to go directly to your bank and demand your account information without a tribunal, without a court order, and without your permission. They send a notice to the bank. The bank hands over everything: statements, transactions, balances, the lot. You get a copy of the notice and a summary of why they are looking, but by the time you read it, your bank has already given them what they asked for. In the 12 months to March this year, HMRC issued 1,307 of these notices. That is up from 1,143 the year before. The number is climbing every year, and there is no sign it will stop. So HMRC already knows about your savings interest from the annual bank report. They can pull your full bank records without asking a judge. And there is a third power that was restarted in 2025 after being paused during the pandemic. It is called direct recovery of debts. If you owe HMRC more than £1,000 and you have ignored their letters and you have ignored their phone calls, HMRC can instruct your bank to freeze the money in your account and hand it over. They do not need a court order for this either. They must leave at least £5,000 in your account, and they must give you 30 days to object. But after that, the money goes. This power existed since 2015, but was paused during COVID. The government announced in the spring statement last year that it was coming back. It is now live in what they call a test and learn phase, with full rollout expected soon. Margaret was not a tax cheat. She was not running a business on the side. She was not hiding money offshore. She was a retired woman with a state pension and some savings who did not realize that a £22 gap was all that stood between her and an HMRC investigation. The savings interest trap is catching more pensioners now than at any point in the last decade, because interest rates went up, but the personal allowance has been frozen at £12,570 since 2021. It has not moved in 5 years. Every year the allowance stays frozen and interest rates stay high, more pensioners are pulled into the tax net without knowing it. Here is what you should do. First, check whether your state pension plus your savings interest plus any private pension income adds up to more than £12,570. If it does, you may owe tax and you need to contact HMRC. Second, if your savings are earning more than £1,000 a year in interest and you are a basic rate taxpayer, or more than £500 if you are a higher rate taxpayer, the excess is taxable. Your bank does not deduct this tax for you. You are expected to handle it yourself. Third, if you have received a letter from HMRC about undeclared savings interest, do not ignore it. Respond within the deadline. If you make a voluntary disclosure before they come to you, the penalties are significantly lower than if they have to chase you. Fourth, consider whether your money is in the right place. Some pensioners move savings into a cash ISA, where interest is tax-free regardless of how much you earn. Others split savings across accounts to stay under the allowance threshold. A proper review of where your money sits could prevent this entire situation. Every link and contact detail I have mentioned is underneath this video. Pass it along to anyone you know with savings in a bank account. They will thank you for it.